Welcome back to my channel. In this video, I wanted to talk about Comcast. Comcast is a diversified media and entertainment company. Their oldest business is the movie studio. They were making movies 100 years ago. And since then, they diversified into TV stations, cable networks. I'm sure you've heard of NBC, you've heard of CNBC, MSNBC. They have a streaming business in Peacock, so they have really good growth in subscribers of Peacock. They have a lot of intellectual property, a lot of movies that they can show on Peacock. They also have a lot of TV shows, really successful ones like The Office, Seinfeld, those types of shows. They also have connectivity. They connect broadband users and have a lot of subscribers on their broadband. They have a small mobile business. Last, they have a amusement park business where they have theme parks around the world and operate those theme parks. Overall, their probably closest peer is Disney. And Disney's had plenty of problems in the last 5 years. As opposed to that, Comcast has been a smooth operator compared to Disney. Their management's really steered the company from big controversies. The performance of the company has been really consistent. I've liked that. And overall, I think it's a very well managed company. They had an earnings release last week, and investors didn't like it in general. The stock really sold off. And I wanted to take a close look at that earnings report and make my own opinion on it. What do I think about the earnings? Are there positives, negatives, more positives than there are negatives? Also look at the fundamentals and value the company based on free cash flows and based on earnings per share and share that analysis with you. I'll arrive to a decision whether I should buy more shares of Comcast, hold my shares, or sell my shares in this company. Keep in mind, I'm sharing my experience as an individual investor. I am not providing financial advice, and I'm not recommending that you buy Comcast or sell Comcast stock. I'm just sharing my investing journey with you, and I hope you find it interesting. Comcast has a market cap of $151 billion. The revenue is about $122 billion. So you're paying maybe right around 1.5 times sales for this company. Really good net income of $15 billion. So their net income is about 10% of the market cap. They have a forward PE of a low 8.6. Wow, that's a low PE. And they pay a nice dividend of 3.25. Price targets by analysts that cover this stock, and there's a number of analysts that cover it, say that the stock is discounted by about 29%. That's a pretty good discount. If you look at the past year, the stock has been on the decline. The stock was trading at around $46 per share, and it's down to about $38 a share. So what gives? Why is the stock price down? Let's take a closer look and see what the company's been doing, and I'll begin to accumulate some of these fundamentals for my valuation. Let's take a look at the revenue. Revenue has been growing. Although in 2023, the revenue didn't grow a whole lot. In 22, it did grow. In 2021, it grew at a good rate of 12%. 2020, you can understand why revenue went down. There are amusement parks. You had COVID lockdowns. People couldn't go to them. But the growth has been there. Other than the COVID year, it's green on the screen. So that looks really good from a revenue top line growth. You look at their cash from operations over the last 10 years, it's very enviable, very high amounts of operating cash flow. And then there's CapEx. But net of CapEx, the free cash flow, last year was around $13 billion. The year before that, about $12.4 billion. Just really good free cash flow generation from Comcast. If you compare this to Disney, Comcast generates far more free cash flow than Disney. Just a really consistent performer when it comes to free cash flow and growing their top line revenue. The company for 2024, it's expected they're going to do $4.36 per share, and they're going to be growing that by 17% in 24, 8% in 25, 12% in 26, 15% in 27. Very good growth expected on earnings per share. A total of 33 analysts are voicing an opinion of where their earnings per share will be in 2024. So this has a lot of coverage. So I have a little more confidence in these numbers because so many analysts are covering Comcast. 22 analysts voiced an opinion of what the stock is the price target is, what it's worth. And the average is $49.56, which is above 29% of its current stock price. So analysts are agreeing that the stock is discounted and will likely go up. The high on the price targets is $55 and the low is $43. And the 43 is still above the current share price. So overall, analysts believe that this is a good buy and the stock price should rise over time. Comcast pays a really nice dividend of 3.25%. It represents a 32.8% payout ratio, which is low. Very good. They also buy back shares. Their buyback yield is 5.79. When When you combine the 3.25 and the 5.79, that's a really nice effective yield of dividend plus buybacks of over 9%. That's phenomenal. And that's one of the reasons why this stock is attractive to a lot of value and income investors. So really good fundamentals with regards to its dividend. Let me look at the earnings report that they announced on April 25th, representing the performance for the first quarter of 2024. The company grew their revenues by about 1%. Based on the stock price action that I saw, I expected that I was going to see a contraction of the top line, but actually the top line grew by 1%. They didn't set any records on that type of growth, but it's good to see the company grow. The other thing too is adjusted income went up 7.6%. That's good news. Earnings per share went up 6.5%. Good news. Cash flow up. So there's a lot of things pointing up and are favorable. They're good. That means the company's making more cash, making more money, making more profits. And this is where I think some of the negative news came out of is the connectivity. The residential connectivity went down. And a lot of people value that quite a bit with Comcast. It's probably the most stable revenue stream that they have. So I understand that's the case. And it did go down a little bit. So if it continues to go down, especially if it goes down at a significant rate, I would agree that's a big problem. But if it's just a blip and they can course correct, maybe grow their subscribers, maybe increase the cost of that broadband service and recover some of those revenues, I think we'll be in good shape. What do I think Comcast is worth? Well, I'd like to determine the value that I believe the cash flows are worth. And I'd also like to determine the value that their earnings per share going into the future, what that's worth. Those two will represent a value for Comcast. First, I'm going to start with the valuing their free cash flows. I'm going to start with the cash flows that they produced in 2023. This number is a good starting point. It'll be a little more conservative than their current run rate. Their current cash flows in 2024 are a little bit higher than what they were the previous quarter of the previous year. And I'm going to grow those free cash flows by a nice modest growth rate of 5%. They've grown them quicker than that, but I think it's a nice conservative growth rate. And terminal value, I'm going to grow by 4%. And that's going to establish all the cash flows after year 4. To discount all those cash flows and put them into a net present value, I'm going to use 8.5% as the discount rate. To get to an intrinsic value, a net present value of all those cash flows of being $273 billion. I'm going to add the cash on the balance sheet and take away debt to get to an equity value. That's the intrinsic value of all the cash flows less the net debt that exists on the balance sheet. When I compare that to the market cap of the company, the equity value is higher than the market cap, and it represents a 21% discount on the company. And that's a pretty good discount on a quality company. This is Comcast, very consistent operator. Earnings per share look good. The earnings per share are expected this year to be $4.36. I'm going to go with a conservative PE of 12. It should be higher. This is a quality company, but I'm going to go with 12 to be conservative. They're expected to grow more than 10%, but I'm going to just grow earnings per share by 10%. And I estimate that each share based on these metrics is worth $57.55. But the current share price is $38. So there's a 51% discount if we use earnings per share. When I blend the two, and I have a blend that takes two parts of the free cash flow method, one part of the earnings per share method, I get to a 31% discount on Comcast. And my discount is similar to what those 22 analysts had as an average. Their average was 29% discount minus 31. So we are somewhat in line, the analyst, in my estimations as well. Looking at the balance sheet, the company doesn't have too much debt. The net debt, which is all debt minus cash, is $90.87 billion. The company generates $38.8 billion of EBITDA, which is earnings before depreciation, taxes, and interest. And that gives me a ratio of 2.34, and I like that ratio to be below 3. So it qualifies good quality balance sheet. I think overall their balance sheet's very consistent, so I'm comfortable with the balance sheet that Comcast has. Should I buy, hold, or sell Comcast stock? Let me make that decision by looking at 3 areas. The first area is the company, second area, balance sheet, and third area is the discount. First, the company. Do I want to be a part owner in the business? Do I really like the business? Do I believe in them? Is their management team performing really well? The answer is yes to all the above. I think Comcast has really good assets in the movies they've made, the library of content they have, the amusement parks, the characters that they have in their library are very valuable. They also have really good businesses that have continued to operate well. NBC, CNBC, Peacock keeps growing. And I didn't talk a lot about that, but Peacock subscribers are really growing. They grew 55%. That's a very good growth rate for their streaming business. So overall, I really like their business. I think they have good competitive advantages. They have good moats around their businesses. And I think it's a business worth having. And their management team's doing an excellent job. They have a quality balance sheet. So their balance sheet's good. Their debt is less than 3 times EBITDA. I don't see any problem with their balance sheet. So I like the company. I like the balance sheet. And they provide a very good discount for a quality company. 31% discount on a quality company is a very good discount. And I think that's because the stock has been selling off and the stock price has been going down for about 4 to 5 months. And the stock market tends to do that. The stock market will dislike a stock for a period of time, discount it, and then investors realize it's discounted and very good value, and the stock goes up in value. I'm hoping that I'm catching this stock at the right time to buy, because I'm going to continue to buy shares in Comcast at this low share price, because I believe that over the next couple of years, this stock will be worth more. In the meantime, it pays a really nice dividend and it keeps buying back shares. So overall, I believe it's a very good investment for the next 5 years. Thank you for watching the video. I really appreciate it, and I hope you found it really interesting. Good luck investing in 2024.